you don't have a buying problem, you have a creativity problem. And so you can make the numbers work. You can figure out how to make the numbers work, and then you can present that. Doesn't mean that you're going to get it, but you can try to figure out how to make it work.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate, right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Mila Schwarz here on the show. Mila, welcome.
Thank you, Neil.
I'm excited you're here, so I appreciate being here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Recently, we live in West Des Moines, the Valley Junction area. I was born in Des Moines, but grew up about an hour southeast of here. My husband, I don't actually know where he was born. I think he was born in Boone, but he grew up in Boone.
Yeah.
So we met in 2000, and then we started our real estate journey in 2006.
Your husband, Tony, that's the we, right?
Yes, that's the we.
The better half.
Yes.
So you started your real estate journey. What does that mean? You started in 2000. So take me there, and then we'll walk it forward.
We met in 2000. Then we ended up getting married in 2006. And that's when we bought our first duplex.
Okay.
And so that happened. And I ended up breaking my 401 that I had at an old employer job. And that was my retirement.
Going buying the duplex, you
Yes.
got to bank it all there for retirement.
Yes.
And what did you do with the duplex?
We still own it today,
Okay.
but we actually did not know how to increase or get further ahead until about 5 or 6 years ago.
Okay. What happened then?
We went to a 3-day seminar.
Yeah.
And it really just helped to expand. And then also I was listening to Bigger Pockets at that time. And we learned how to do a refinance on all of our properties that we own personally, as well as the duplex. And we've just been growing since then.
In between a handful of years ago, and then I guess back to 2006 when you bought the duplex, and a few years ago, that interim, did you buy additional properties?
Yes.
What was taking place there?
So we have 65 doors now.
Okay.
Some of them, we had that, like I said, original duplex.
Yeah.
And then we bought another duplex, and then we rented out the house that we were living in here. And so that's part of our portfolio as well.
Okay. So 65 doors today, what does that primarily consist of? Single families, or are you into the multis?
We have some single families, we have some multifamily, and we also have a couple duplexes, but the multifamily is a 13 unit and a 41 unit.
Okay. When did you buy the 13 and the 41?
The 13 we purchased December 28th, 2022.
Okay.
And then the 41 unit we purchased April of 2023.
Yeah. So a lot of growth in the last handful of years. And that's largely because you've really soaked up from an education standpoint.
Yes. We try to go to seminars. I try to listen to all different kinds of podcasts, watch some YouTube videos of different people talking. We've been in masterminds as well.
And you're actively participating in meetups here in town.
Yes.
Connecting with other investors. You manage everything yourself?
Yes.
Okay. So talk to me about the management piece, because it's two different jobs. Owning is one thing, right? And being
Yes.
the asset manager, meaning you're going to manage the manager, and then actually being the manager are two different things.
Yes.
What's the biggest challenge about the management component?
Time. And I have no delay in renting the properties. It's time to get them turned around and get them fixed and completed. And I have wait lists for most of my properties.
Interesting. What management platform are you using?
We use Rent Tech Direct.
Okay.
And I've used Rent Ready in the past. Didn't care for it, but that was my own personal preference. I would like to move to Appfolio, but we have some tenants when we bought the 41 unit, because it was under hotel motel licensing, they were paying biweekly or weekly. and Appfolio only goes monthly.
Monthly.
Yes.
Can't change that. That's interesting.
Yeah. I wish we could because Appfolio is a little bit more user-friendly.
A little more robust as well.
Yes.
Mm-hmm.
Yes.
Looking back over the last handful of years, going from a duplex to now 65 doors, what's been the biggest challenge?
Finding the deals. Finding them and making sure that they fit our buying criteria. As you and I have talked, everyone's buying criteria is different, and what they want it to cash flow as and all of that sort of thing is different. What works for me may not work for someone else, and what works for them doesn't work for me.
Yeah, isn't that funny? Because so often people think, oh, we're competing against people for the same thing, and maybe, but the product may be the same, but how one views that product may be completely different.
Correct.
Yeah.
Correct. As we've talked about in our Friday morning meetups at Smoky Row, you got to make sure it cash flows, but everyone's idea of a cash flowing property is different.
Correct.
Some people it's $100, some people it's $400. It just depends.
Just depends.
Yes.
Yeah. That, and you've got a lot of money moving regularly. 1031 has a different motivation in many cases, right?
Yes. Yes.
And cash flow is not typically at the top of the list. It's how do we not pay taxes?
Yes,
right?
that would be one.
Yeah.
One thing, but we've not sold anything big enough to actually do a 1031 yet.
Yeah.
But that doesn't mean that won't happen next year.
Yeah, nice. Be on the lookout for something to go for sale. Yes.
Yes.
Take me back to management. You said you typically have a wait list. What do you attribute that to? Because I know a whole bunch of people are going to be eternally jealous of a wait list as they go out and try to find people to.
Just lay it all out there for them and go with it that way. And as long as they feel like you're respecting them, even though they may not have the best rental history, they're going to want to rent with you.
It's incredible when you look at the property management companies' reviews on Google. Almost nobody's are positive, right? And it's always from people who don't pay and you got to kick out or take action.
Yes.
One way or another. But it's always interesting when you stumble across a very high review, and a lot of it just has to do with the basics.
Yes, it does. When we bought our duplex in Clive several years ago, one of the first things that we went in and did was put in smoke and carbon monoxide detectors. Most of them were inoperable, not working, that were there. And 2 months later, the carbon monoxide detector went off and the water heater malfunctioned.
Wow.
Yeah. So we pretty much saved a family's life.
Correct.
Yeah. And so she's very appreciative of that. Yeah.
Based on what, a $20, $30 investment.
Yes.
Yeah.
And back then they were 20 or less.
Exactly.
Now they're a little bit more.
Correct. Yeah, you're right about that. That's incredible.
I recently managed a 100-unit property, and I'm getting phone calls from those tenants wanting to know if I have any other place to go because they don't like where they're at now.
New management style there. Yeah. It's incredible when people see these places, and I suspect typically smaller, lower end of the rent scale. Is that fair to say?
Yes.
And they value the people and the relationships probably more than they value the particular box in which they're living in.
Yes. I will have someone that will need something bigger, but they're willing to settle for something smaller because I have it.
How have you been, the acquisitions you've made over the years, how have you purchased those? Are you direct to a seller, or are they off market through a broker, or typically on market? What does that look like?
On the multifamily ones at 13 and 41, they were on the market.
Yeah.
Both of those, I was a longer process to actually acquire because we looked at like the 41 unit, we looked at it and I couldn't make any of the numbers work or anything like that. Someone else put it under contract. So we knew what their numbers were and what the seller was willing to do. And then they backed out of it. So we just went in with that same numbers and it worked. Yeah. So it was amazing that it just all worked out.
Yeah. How has the interest rates moving to really over the course of the last 2 years, how has that impacted you and your underwriting and your ability to buy today?
It's not really impacted us at all because of the fact that if it cash flows, it cash flows. Yeah. If it meets the criteria and it's what we're looking for, the numbers work. Yeah. And so the interest rate doesn't matter.
You're typically buying some value add properties?
Yes,
Yeah.
usually.
All right.
Yeah.
So what I hear you saying, reading between the lines, is when buying value add, that cap rate as it's presented today isn't a particularly big deal. It's not what you're basing purchasing decision on, because you're going through your underwriting, you're looking at a rate of return over, I suspect, a period of time,
Yes.
some defined hold period. And since you're adding value, those rents are going up. Ideally, the expenses are decreasing at the same time.
Correct.
Yeah. And if you can make the deal work, fantastic. And the interest rate just is what it is to get that outcome.
Correct.
Okay.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
On the single family side, do you guys do any Airbnbs, any short-term stuff?
We have one Airbnb, but Tony is selling it. It has a pool and it just went under contract.
Oh, yeah, cool.
And I ended up buying that as an off-market property.
Yeah.
And then we just ended up keeping it for ourselves instead of what they call wholesaling it out.
Sure. Yeah.
It was just through a connection I had. And that's a lot of the single families that we do buy are through connections or people that we know. They're saying, hey, can you help this person out?
Yeah.
And so that's how I get those leads.
Pros and cons of an Airbnb with a pool.
There's really not any cons of the Airbnb with a pool, except for possibly parties.
Yeah.
But as long as you vet your tenants or guests prior to that, then you're going to be fine. With Airbnb, that's not my forte. That's Tony's.
Yeah.
And so I wouldn't do a Airbnb under our portfolio just because of the fact of the turnover.
Sure.
I'm not wanting that turnover that quickly.
Yeah.
Now I do midterm rentals, so traveling nurses, but most of my nurses, either their contract gets canceled midterm, which it's probably only like maybe 10%, but the other 90%, they almost stay the full year.
Okay.
Until they can't renew any longer.
So the implication of that is you've rented it to them on a midterm basis, which means they have a higher than average rent if they were going to rent for a year.
Yes.
And the majority of them end up staying a year.
Yes.
That's quite a hack. All right. I love that. See, I've learned something new today.
And I actually have one gentleman, he left middle of summer because his contract was up.
Yeah.
And he's coming back.
Okay.
And so I'm going to place him back in the same building it was in. It won't be the same unit, but it'll be the same building.
I'm curious what happens. So the 10% of the time where the contract ends early, what happens?
Usually it's because the nurse and other nurses of wherever they're working don't get along. And so the traveler is not going to do this.
Yeah.
And so they just get a different assignment somewhere else.
Yeah. What are the financial implications to you?
I usually let them out of their lease.
Okay.
I'm not going to hold someone to that when they're traveling.
Yeah.
That was the other thing that I tell all of my travelers, that I'm not going to rent your room out until I know positively you're leaving, because of the fact that I don't want you to renew at the last minute and not have a place to go. And they're very appreciative of that.
All right. What I heard you say is rent your room out. Explain. Is that something significant? Meaning, are you renting these places by the rooms?
I did at one property, but when I use the room apartment or location, I did have a duplex that was 2 bedrooms, 2 bathrooms. And so I made one of the smaller bedrooms into an office. And because they each had a bathroom, I rented out one room by the room and the other, and they just had the shared living space and laundry and kitchen. And
all right, what did that do to dollars? Meaning, what would a normal annual, if somebody was going to rent it for a year, what is that on a monthly basis? And if they do a midterm, what is that on a monthly basis?
We converted that back because I had a family member that needed a place to rent. So they're paying $1,300, probably can get $1,400 out of it. Okay. But with the midterm, I was getting $1,000 out of one room and $900 out of the other room.
Do you offer on the midterm cleaning services? Is there anything special there on the midterm basis, or is it largely just their flexibility with a shorter term lease?
Just basic their flexibility. Now I do have electricians that have said, hey, do you know any cleaning people? So I have a lady that cleans on my turnovers. And so I give her, they exchange information. I'm completely out of it. So she gets work from them. They're appreciative. I know then the place is kept clean too.
Yeah, absolutely.
Yeah.
How are you using financing? The properties that you bought, you just go to a bank, typically 20 or 30% down, or is there something more creative in your acquisition of these properties?
We've done more creative acquisitions and then refinanced and put money back out. We've done private money. We have done some fix and flips. And so we have borrowed hard money for that, but we've also borrowed private money to finish them up. Yeah.
So anywhere you can get it, right? Where it can make sense on the deal.
Yes. You just have to account for if you're paying your private money guy 10%, 12%, you just have to look at that as a second mortgage on the property and add that in.
Yeah. What's your team structure look like today? You've got 65 doors. Is it just you and Tony?
We have 2 people that work with us as handymen.
Okay.
They're 1099. One has a full-time job, so he works usually Wednesday nights and Saturdays. Okay. Last night, we were down at my parents' house finishing a bathroom. That's a little bit beyond the scope of work that we would normally do, but needed to get that done. And then we have another gentleman who does flipping on the side and also has rentals. And so in his spare time, when he's trying to find a house, he's working for us to generate income for himself.
Oh, okay, cool.
Yeah.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Going back to the beginning, at what point did you quit your job? I'm wondering where along this path did that take place?
When we moved to San Diego, I pretty much quit being full-time.
What year was that?
Oh, gosh.
You knew I was going to ask.
I know you're going to ask me this.
Approximately.
I would say 8 years ago.
Okay.
Because we were out there for 3 years. Oh, no, it's probably been 9 years now.
Okay.
That we moved out there.
Yeah, about 2015 then.
Yes.
Okay.
And don't quote me on that.
What took you out there?
Tony's job.
Okay.
He found a job with a bank out there because he was a chief information security officer.
Yeah.
And so we went out for his job.
All right. So about 2015, that's when you left the full-time world.
Yes.
And did you do some part-time things along with the real estate, or was it all real estate?
Well, I did. I was in the insurance industry.
Yeah.
So I did work, probably like 2-3 hours a week for an agent that I was working for before. Yeah. Just basically if his 2 people he hired after I left had questions or needed extra help or support or anything like that, then I would do that. And I still do some insurance right now.
Is Tony working full-time now, or is he all in real estate?
He is pretty much all in real estate. He's working maybe 10 hours a month for a contract job with a guy out of Illinois for security.
What are you most excited about in the next year?
How things are going to change.
Yeah.
Because we're coming up on an election year.
Right.
So good things and bad things could happen.
Sure.
Just also looking forward to my future and trying to pivot a little bit away from real estate, but still keep my hands in it, moving towards syndication. So also growing and then being on more podcasts. I am going to be writing a book. I tried to do it a while ago and didn't have the time to do it. Yeah. But now that I'm starting to implement some people that I'm hiring to help take on some of my duties, I can get back to that.
Good for you. What's the book about?
It is basically The Art of Adulting, 10 Essential Life Skills.
Okay.
That's basically things I wish I would have known prior to 5 or 6 years ago that would have catapulted us totally from 06. It could have taken us where we are now, way back then.
Yeah. Well, that'll be incredible.
Yes.
Tons of things to learn along the way, and it never stops, does it?
It never stops.
Yeah.
I learned something new every single week.
Yeah. For you, why Iowa? What keeps you here? Why did you decide to be here? Why did you decide to invest here? You spent time in San Diego. You could do what you do anywhere, but why Iowa?
Basically because of family. We moved back to Iowa because of Tony's mom. She was a little on the decline, and so was his dad. And so we moved back to Iowa. Since we've been back, they both have passed. And now my mom and dad are here still. Yeah. And so I am a big part of their caretaking as well.
Are you ready for the final 3 questions?
I don't know. Is it the like Jeopardy round?
Yeah. The first one's a law ball because it's right in line with your book. If you had one piece of advice for your 20-year-old self, what would it be?
Networking and budgeting.
All right. So what benefits have you drawn out from networking? Why do you continue to do it today?
The benefits I get out of networking is for my own personal satisfaction of helping somebody.
Yeah.
And also things come back around to you.
Sure.
So it doesn't matter if you meet someone once or twice or you meet them every week and talk. It's always a good idea to give them knowledge and then it will always come back to you.
Yeah. Fair to say, when you say networking, what you mean more specifically is networking inside the investor real estate community.
Not necessarily.
Oh, okay.
Yeah, because you never know when you're going to run across somebody that isn't necessarily in the real estate community, but maybe they want to get in, maybe they have money. Our private money lender, he's not really in the investing world, but he loans.
Yeah. And on the budget side, share a little about that.
When I graduated from high school many years ago, they never taught us anything about money at all. And budget and what needs to go where. And with apartments, you have to be able to have reserves in case something happens and like escrow for property taxes and all of that sort of thing. And that's something that no one ever really teaches.
Yeah. Yeah. You're ill-equipped coming out of high school to do much of anything.
Yes.
2 books that changed your life.
There's so many because I've been listening to so many books lately. The Pumpkin Plan. Buy Back Your Time. I also liked Psycho-Cybernetics. That was a good book. I actually like it better than Think and Grow Rich, even though it's along the same lines of everything, but it's just more a little to the point.
One has a substantially better title.
Yes.
Yeah.
I have read Rich Dad, Poor Dad.
Sure.
I've read lots of other books as well.
Yeah. All right. If you were cast away on an island for a year, you can only get 3 pieces of data about your business each and every month. What 3 things must you know?
The information from Rent Tech. Does that count?
Yeah, sure.
Okay. Because that tells me who's paid rent, who hasn't paid rent, what work orders are coming in, what vacancies are out there, who's moving in. So that would be one of them.
Yeah.
3 pieces of information. What the market's doing. Doesn't have to be specific markets, just what to be aware of in the entire United States versus even locally here in Iowa.
Yep.
Just have the kind of a hands-on of what's going on. So probably a podcast like this one for here in Iowa.
Yeah.
Let's see, a third thing that I would want. Probably just an open line of communication to whoever's handling everything. Spend 1 hour a day getting caught up of what's going on.
There you go. You want a pulse of it all.
Yes.
Right? Yeah. Mila, I've asked lots of questions. What's one question that I did not ask that I should have asked?
I guess one of the things, like when we bought one of our duplexes, we had refinanced one of our other properties. And so we had the cash to be able to buy it outright cash. And then we did the refinance later. There's ways to do everything out there. You just have to be creative and trying to figure out that way. I've heard from one of the other bigger people out of Arizona say, you don't have a buying problem, you have a creativity problem. And so you can make the numbers work. You can figure out how to make the numbers work. And then you can present that. Doesn't mean that you're going to get it, but you can try to figure out how to make it work.
Sure. Yeah. The old saying, you name the price, I name the terms.
Yes.
So they can hit any number. It's a function of what the terms look like, how creative one can get.
Yes.
So what I hear you saying is it goes past just using your dollars. You got to ultimately think differently in order to achieve a different outcome.
You do.
Yeah. For people who want to find you, they want to follow you, they want to connect with you, where can they go? What should they do?
If they text Mila, which is M as in Mary, ILA, to 33777, then we can stay in touch that way.
Perfect. It's below in the show notes for everybody. Mila, I appreciate you being here.
Thank you.
Thank you.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.